Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this as usual late Friday morning, June 16th. Happy Father's Day weekend to all out there, all the dads out there. When it comes to the market, listen, when you're looking at the bigger picture evidence, which is, intermediate to longer term sort of thing, you really couldn't ask for much more. I mean, the market's been following the bullish script almost to a T here in the last month. We've seen the indexes act well. We've seen the broader indexes, I wouldn't say completely kick into gear, but certainly show strength. We've seen the number of new lows dry up. We've seen growth stocks act well. We have seen a little bit of a pop in defensive stocks this week, but they're still underperforming most other stuff. And I think most importantly is that, and I've said this, I don't even know, a couple dozen times here, the biggest number one bugaboo of the market in the past 18 months, 2 years, has been, failed breakouts, selling at resistance, selling on strength, however you want to phrase it. You've just seen a lot of things sort of get up to key levels and then fail, or break out for a week or two and then fail, that sort of thing. And we were seeing that just as of really 6-7 weeks ago on earnings, stuff like that. But that's really changed here. We've seen a lot of stocks, institutional quality, smaller, really break out, show some upside power, and for the most part, hold on to those. Now, short term, there's no question we're stretched to the upside here in the NASDAQ, especially in a lot of these stocks. Sentiment-wise, without indicators, just, a lot of the worries like the banking crisis, nobody's talking about that anymore, So I do think, there's a decent chance you're going to have some, rotation, pullback, some discomfort here in the near term. I'm not saying it's a 100% chance, but I think, it's reasonable to expect some sort of potholes, some bumps in the road, so to speak. But I'm not going to go too much beyond that. At this point, so far, this really does have the characteristics of sort of the, I don't want to say blast off, but sort of the kickoff rally. It's kind of a lockout rally. Everyone's sort of rushing, not because there's so much enthusiasm out there, like the world is great. That's not it. It's that everyone's underinvested or invested in the wrong things. And so pullbacks have been limited to a few hours really before the things start to ramp up again. That will end eventually. You are going to get some pullbacks, and they will be sharp. They're not going to pull back 0.5% a day for 5 days. But big picture, again, if you're short term, that's a little different. And I wouldn't be chasing things that are sticking straight up in the air like the NASDAQ is. But I think if you're intermediate to longer term, clearly the evidence is at least as bullish, since it has been a year and a half. And really, for growth stocks, probably the best set of evidence we're seeing right now since the early to mid part of 2020. Not saying that that's what's going to happen going forward and having that bonanza, but we are seeing things start to click. Okay, let me hop into the charts and I'll always show you what I'm talking about. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. You can see here as I record this, the NASDAQ starting to reverse a little bit. The NASDAQ, hit, I guess this is, let's call this 13,800 today. And the 50-day line is at 12,600. So 1,200 points, that's all. Now, I wouldn't expect it to, do something like this. That would be sort of abnormal, even though it would be, above moving averages. But clearly we're stretched. And like I said, it's been 8 weeks now up in a row on the NASDAQ. You can see on the weekly chart here, if you count, it's been 8 weeks up in a row. The first 2 or 3 weren't much. But clearly we're stretched here. So some sort of, sharp pullback, shake the tree event could easily come. And actually we're starting to see that in some of the growth stocks. So I would say when it comes to growth, I'm sort of more looking for things on pullbacks or maybe, some tightness or something like that. It's also possible we might get some rotation. I'm not predicting this, but if we do, we could be looking at maybe breakouts in other non-growth groups, so to speak. So some of those could still sort of kick into gear, but it's just something to be aware of. Just running through the other indexes, though, you can see the NASDAQ certainly the strongest, but the S&P, it cleared this 4,200 that everyone was talking about, still holding up pretty well. I would say the other indexes, they haven't, like I said last week, they had 3 or 4 good days, and you can see this is the IWM, and it kind of sat down here for a while, and it did, boom, 3 or 4 good days, and it hasn't given any of that up, which is a good thing. It also hasn't really built on that, so we'll see how it goes. I'm more of a trend guy than a levels guy, as I've said many times. So it's still above the moving averages. MDY, same sort of thing. It had sort of this bottom area, a nice leap. Okay, and now it's pretty much holding right in here. So the longer it can hold up here, the better the chance it can get going, but still above the moving averages. And same thing with like the New York Composite. So you definitely have, I don't want to say a divergence, but you definitely have, growth and the tech and the AI and stuff like that is doing great, especially mega cap growth. There's still other pockets of the market that are good. They're just not great. My favorite measure, our favorite measure here at Cabot of the broad market is the number of stocks hitting new lows, and those have been very tame. They can always change, going forward, but just going with the evidence now, it's looking pretty good, okay? More than that, just kind of following along with the script. If you just run through, this is the IWO, run through some growth funds and indexes. Again, it's not as strong as the NASDAQ, but better than the small caps as a whole. And again, just kind of had this nice thrust finally and is holding those gains. If you want to look at the ARK fund, ARKK, just keep an eye on it here. Just because it's, it's aggressive and all that stuff, Kathy Wood. Still in this kind of steep short-term uptrend, still below this high in February, but near-term above the moving averages. The IPO fund, which is from Renaissance, symbol IPO, new multi-month highs, nice run. Of course, semiconductors, SMH. I'm just running through these things, that looks good. Even something like XLI, this isn't growth, but this is industrials. You are seeing some broadening out. It's not just, chips and networking or whatever, okay? And then you just compare that to, XLP has been picking up steam here this week, I would say the last few days. So we'll see, okay? Maybe I'm doing the video next week or a couple weeks from now, and XLP's, up here, and the NASDAQ has sold off, 5% or something like that, just to, hey, maybe the Fed this week saying they're going to hike rates another once or twice or three times is getting people to reshift their expectations. But right now it's just too early to say that, especially because, this has had a nice move this week, but it's still underperforming the NASDAQ or performing the same amount. It's not like it was back here where most of the market was struggling, okay? The one thing I would keep an eye on if we're talking about, I always like to look at both sides. So you look at all the evidence. XLF is your general financial fund, of course, and then there was KRE, which is the regional banks, which were the center of the storm. They really haven't. They had a good few days here. This was kind of when the small and mid cap indexes did well. A few days, you can see it ramp, and percentage-wise, that's a pretty big move. This is from like 38 to 45 or something. But you can just see it's kind of been. It's just not participating, okay? Now, maybe these things start to ramp and the NASDAQ pulls back. Like I said, maybe there's rotation. But I'm just, keeping a distant eye on this. I'm not buying because of this. I'm not, holding a ton of cash because the financials are at the 200-day line. But I am just kind of keeping an eye on it because if something is out there that's going to surprise the market near term, my guess is it's probably going to come something from the financial area or at least be seen in the financial stocks. So I'm just pointing it out. But overall, again, you can always find, if there's 100 factors, you can, even in the best market of all time, you're probably going to find 20 bearish factors, you know what I mean? So there's always going to be something that's not ideal. In fact, when everything looks good, that's when enthusiasm's at its highest. But that said, the vast majority of evidence here is positive. So I wouldn't be cannonballing into the pool, but put money to work, ideally on pullbacks and at logical entry points makes sense, okay? Like I said, now into individual stocks. When it comes to growth stocks, I'm sort of more right now into the pullback. If you're getting a growth, when I say growth, if you're buying like the seventh stock in the semiconductor industry to break out, it could work. I'm not saying it's not going to work, but it probably isn't really the leader. I'd rather look at the one or two or three that broke out first, that have the numbers and the sales and earnings and all that, and just keep an eye on that and try to, maybe nibble into it or, get into it on a pullback or something like that. So, ACLS has been one of the leaders all year. It actually broke out, the third or fourth day of the year. And it's had this huge run here. And it's just starting to pull back. This doesn't look like much. It's about 10% from high to low, still way above the moving averages. But here's an example of one that, yes, you wouldn't want to see it down 10%, on Monday morning or something like that. But, if this does pull into some moving averages, that's one way to start a position. Another way is to let it pull back, hopefully further, and then wait for it to resume the advance. That way, if it doesn't resume the advance, if something is wrong, so to speak, you're not just buying the dip and hoping. But either way, this so far looks totally normal, and this is one that's on my watch list. And if it does pull back, consolidate, which it probably will consolidate a little bit more. There has been some volume selling down here, well deserved. But if it consolidates a little bit more, it could present an entry point. MongoDB, MDB, it's a little early here, but it had a huge gap on earnings, you can see, and just has held tight for the last couple of weeks. The longer the better. If the market pulls back, this is probably pulling in here. But if it can hold most of its gain for a little bit while longer, that would be interesting. Now, I mentioned like, you don't want to see breakouts, but here's Inspire. This one did break out earlier, kind of to new highs a few weeks ago. And it's just been kind of, I don't know, the last 4 weeks it's just been kind of chilling out here. You can see in this area, maybe it can get going here, maybe not. But either way, we'll see. We have a small position in it. Maybe it dies, but the longer it can kind of hold up here, I think the better the chance that it resumes to the upside. Spotify, SPOT, this is kind of growth, kind of special situation, but it's actually popping today. But I liked how it kind of just see how this lately, it hasn't been super hot, number one, but certainly strong and just kind of nice and tight in here. And it was up a bunch of days in a row, but it's basically flat, going sideways right at the 25-day line. So it's kind of an interesting situation. And, risk reward wise, it's not sticking straight up in the air up here. The moving averages are relatively close. Duolingo, DUOL. The issue, so this one is volatile. This day right here was wild, down, but still, it's just down to the 25-day moving average. The small, I don't want to say concern, the issue with things that are starting to pull back right now while the NASDAQ is up here is that if the NASDAQ starts pulling back, do these things just keep, come back further? So that's why I was saying sometimes you might want to wait for it to resume the advance, but I'm probably getting too much in the weeds here, but it's been going through my mind. But either way, Duolingo looks proper. It's volatile. You'd love to see it have a few kind of just quiet days. People go focus on some other stuff, or whatever. But overall looks pretty good here and it should quote unquote have good support in here in general. Okay. ServiceNow, not really a good buy point here, but I'm just mentioning this as sort of a, big cap stock, good numbers, institutional quality, obviously had this nice kind of low level base breakout a few weeks ago, and it's followed through nicely. No volume on this move right here. You can see down here this week. So, maybe it pulls back in here if the market does, and maybe you got to meet up with this 25-day line. Just a name to keep an eye on. DraftKings, this is sort of like Duolingo, it had this gap here. It really hasn't done much the last few weeks. So you can look at that a few different ways. Hey, it's not participating in the rally. It's not a leader. I tend to think the stock has shown a decent amount of power here. This is still on my watch list. You can see the buying down here and really no selling. And now it's just kind of coming into its moving averages. So I would say it's getting kind of close, whether it pulls back in further or you wait for a resumption of the rally. But DraftKings is a name to watch. RMBS, chip stock that has pulled back in here, has seen some volume, but pulling back into the 25-day moving average. Again, same sort of story here. Do you wait for a resumption or maybe a dip further toward the 50-day line, whatever? Just a name that I'm seeing that's had a big run. It's pulling back, but it's not doing anything wrong. It's certainly well-deserved. And odds favor that these things, when they pull back, will find support and go up. They all probably won't, but the odds certainly favor that. Just a couple more on the growth side. This is Samsara IoT. This one had what I call double skyscrapers, which is 2 weeks in a row of just kind of out of this world volume for that stock at a key level. Sometimes it can be off the bottom like Yahoo was 20 years ago. But this one obviously was kind of coming out of this sort of congestion area. Yeah, long story short. So far, it looks like it's pretty tight this week, net. But on the daily chart, maybe you do get some, retrenchment, again, as the moving averages catch up. And then last but not least, HubSpot, HUBS for growth. It tried to bounce here, but in general, you can just see it's early, but it's starting to kind of, pull back a little bit here. Tested the 25-day line is held. Looks totally fine, but maybe you get a little chance a little bit lower, okay? Now, outside of growth, some of these names I've mentioned before, I still like Mastech. My issue here is if you look at this thin blue line right here is the relative performance line to the S&P 500. So, we want stocks that are outperforming the market, obviously. So this one really hasn't, which is one kind of yellow flag to me. But in general, A, it's not a super fast moving stock in a pretty strong market. And B, there's very persistent run here to new price highs. And on the weekly chart, this is MTZ. This was 6 weeks in a row. You can just see really a 6-week volume cluster as the stock just kind of ramped up here. Again, this thing isn't an AI stock going up 50% in a week. But it's strong, and my guess is, the path of least resistance is up. Airlines, they were strong earlier this year. Obviously, I'm not an airline connoisseur, so to speak, here in the market. But this is United. This one was I don't want to say a leader, but it was among the airlines. It looked like a leader earlier this year. You could see with this ramp. Got hit here during the financial bank thing is going to hit the economy, but it's kind of held the 200-day line, and now it's ramping higher. Earnings estimates are still huge, like $10 a share this year or $9 or whatever. Jets is it's an ETF, JETS, it's the ETF for the airlines. Delta Airlines looks pretty good. There's a few in the group. So you're seeing some of these cyclical travel names that, they pulled back thinking like, oh, there's a risk that earnings are going to get hit, and now it's looking like they're not going to, okay? Aerospace, I'm still watching. This is Boeing. This is kind of what we used to see here a few weeks ago, was the stock is toying with this sort of breakout area, but it can't really get going here. So we'll see how it goes. But, all it would take is 1 or 2 good days. And I think they have an air show coming up. 1 or 2 good days, and this thing could be on the upside. Hexcel is sort of a little bit in the aerospace field too, HXL. And again, you can kind of see this is a nice cup with hand, whatever you want to call it. It's a nice base building effort. So a move above 75 on some volume. It's got good earnings estimates, would be kind of intriguing. This is kind of off the beaten path, but oil, oil's down at $70, down at $70. But there's actually some oil stocks that are set up. This is FTI, Oil Services. Nice and tight in here. Nobody's talking about oil, right? Looks pretty good. Can it get going? We'll see. CHRD, I've mentioned this before, CHRD. This is sort of in the explorer space, pays a dividend, free cash flow, all that. So even though oil's down, you can see this stock's way off its lows and actually set up pretty well in here, okay? And last but not least, I'll just mention, I know you guys all love $2,000 stocks. No, I'm kidding. But this is Chipotle. I just run through stocks. I don't look at the price initially. But CMG, obviously an institutional quality name, has this huge base, finally breaks out on earnings a couple months ago at this point, I think, right? This was in, late April. Okay, so about 2 months ago. And it's basically, it hasn't really gotten going, but it stayed right above this sort of earnings area. The 50-day line's catching up. And you can see on the weekly chart, again, $2,000 stock. So it's not going to be, it's going to be sort of tight. But you can see it's very, very tight in here as the 10-week catches up. Okay, not going to be your fastest horse. But there could be some of these things, my point is, that are outside of, chips, software, AI, all that stuff, networking. That could be outside of that. That could maybe break out if there's a rotation. So I would keep some of those on your watch list. But when it comes to growth, I think, most important to me is that the big picture is very, very bullish. Like I said, you just usually don't see a massive amount of breakouts and then the market just up and dies later. Could this time be the one time it happens? Of course, it's always possible, but I'd rather go with the odds. But I would also go with the odds that a lot of these things are stretched. Some of these things are starting to pull back into support. It depends how you want to play it, but my guess is if we do get a retrenchment or rotation or some selling in the growth stocks, you do want to have your list ready for some of these buy on dip or buy on a resumption after a dip opportunities. Overall, though, like I said, I'm very encouraged with what I see in the market. And after, I'm not going to use any labels here, but after 18 months of waiting and tediousness and fake outs, and we've all lived through it, it's starting to look like the real deal here in terms of the buyers taking control. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.